If you are a veteran with a VA mortgage loan, the VA Streamline Refinance could potentially lower your rate, finance all of your closing costs, and accomplish this without an appraisal on the property, without providing income documentation, and with little or no cash out of pocket. We're going to talk about how it works, how you qualify, and how to determine whether it's right for you at this time. Hey, I'm Peter Lindquist. I've been a mortgage lender in Minnesota for over 30 years. I want to share some of that experience with you. And hey, if you like today's video, give it a thumbs up. That means an awful lot to me. Definitely supports the channel. Understanding the benefits offered to you through the VA mortgage loan can end up saving you a lot of money because it's a great product. And if you got questions or comments, reach out to me directly or put them in the comments below. What is a VA Streamline Refinance? It's designed for veterans who have currently a VA mortgage loan. Doesn't help you if you've got any other type of loan or if you're not a veteran. And the purpose is to make it easier to lower your rate and monthly payment, or to move from a VA ARM to a fixed rate loan. What Streamline means is there's no income documentation, no asset documentation, no appraisal on the property, and typically faster than any other type of refinance. In a minute, I'm going to go through an example with you so you can determine if it is actually worthwhile or not. It also makes sense if you want to get a better rate and maybe your qualifications have changed. You just started self-employment and want to refinance, where most programs are not going to work with you in terms of refinancing. The VA Streamline Refinance doesn't require income qualification. Now, the VA has a net tangible benefit worksheet that is designed to protect veterans from predatory lenders who will offer you a very low interest rate, but will charge an enormous amount of discount points. I just ran into a borrower that was offered an extremely low interest rate, but at a cost of $20,000. And when we looked at whether it's worth it or not, it would take 10 years to save enough money monthly to make up with that $20,000 cost. And 10 years is too long. It's the maximum by the VA is 36 months. So what you do need to qualify is that the current loan has to be VA. Your mortgage payments must have been current within 30 days of the due date over the last 6 months. And let me clarify that. If you made a payment that was late by the lender standards, and so you paid a late fee, but it was less than 30 days late, that does not exclude you from a VA Streamline Refinance. Or if you had a mortgage late payment 7 months ago, again, it does not exclude you from getting a VA Streamline. And you still need to be an eligible veteran. So we pull your certificate of eligibility to ensure that your VA qualifications are still there. Now, I mentioned earlier talking about an example and really want to emphasize that we want to understand whether the costs are worth it to you or not. Now, most costs, if not all, can be rolled into your loan, and that includes the VA funding fee. You might remember that when you got the loan, that can be pretty expensive. On a VA Streamline Refinance, it's reduced to 0.5%. So on a $300,000 loan, that's $1,500, but it's financed on top of the loan. And if you're a veteran with a VA-related disability, that funding fee, of course, is waived by the VA. Now, typical closing costs might be $2,000 to $4,000. And to determine if it's worth it, we want to understand what the break-even period is. And let's take an example of where you're financing $4,000 worth of closing costs, but the reduction in interest rate reduces your monthly payment by $100 a month. At first, that sounds like a great deal, right? I mean, why wouldn't you want to save $100 a month? That would take 40 months as a break-even period. So the $4,000 of closing costs divided by the $100 a month of monthly savings is 40 months. But the VA requires that savings period to be less than 36 months. So in this example of $4,000 of closing costs, your new mortgage payment would have to be at least $112 lower per month in order to break even in less than 36 months. And the shorter that time frame, the better. So if you're saving $200 a month, now that's a 20-month break-even period. And the things that you really want to consider is, let's say you're deciding that you're going to move next year. Well, if you've got a 30-month break-even period and you're going to move 8 months from now, it's not worth it to do that Streamline Refinance at this point, because you're not going to have enough time in your home to save enough monthly to break even with how much you've added to the loan amount. Now, one of the things that I've noticed, veterans get bombarded with mail all the time, and sometimes it's advertising unrealistically low interest rates, and it comes with this crazy set of closing costs that are not disclosed. That's a real problem because it doesn't work as a VA Streamline Refinance because it doesn't work within that 36 months. It's called bait and switch. Just want to encourage you to pay attention to that, be armed with the knowledge, and understand what that break-even period needs to be. Now, there are other times where you can do a no-cost or low-cost refinance with a VA Streamline Refinance loan. So, for example, if the typical closing costs are $4,000 on a $400,000 loan, we can often increase the interest rate that we're going to offer to you. But as a result of increasing that interest rates, we get paid more for the loan when we sell it to our investor. With that money, we can use it to pay your closing costs. So that makes it a no-cost refinance to you. So if you're saving even 0.25% interest and there are no closing costs, then the question is, why wouldn't you do that? And surprisingly enough, I'm going to suggest that there are times when you don't want to do that. If the interest rate market appears to be going down and you think by waiting a month or 2 or 3 that you could obtain a significantly lower rate, that would be the one time where you might want to consider holding off, because VA Streamline Refinance requires that on the existing VA loan that you have made at least 6 payments on it and that the loan is at least 210 days old. So it's not something you can do 3 months after closing. Something you have to wait a little bit of time before you can refinance again. So the 2 times that it really does make sense is that if you're going to be staying in the home for longer than 36 months and that break-even period is less than 36 months, then it's worthwhile. So how do you get started? Well, pretty simple. You can apply online or even just give me a quick phone call and send me your mortgage statement. I'll be able to calculate your savings and tell you your break-even period and help you decide if it's worthwhile. So if you're a veteran and you've got a VA mortgage rates have fallen in the fall of 2025, and we definitely should look at the possibility of saving you some money in the form of a VA Streamline Refinance. Hey, I'm Peter Lindquist. Remember to subscribe to this channel and have a great day.
Dreams are bricks stacked high in the sky.